What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 11th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to go about answering one big question. Can Ethereum, the second largest cryptocurrency, start to trend higher going into the preceding months, and not only in dollar terms, but also against Bitcoin? This is a really important question. The idea of the flippening, as many people propose it, where Ethereum might even come up towards being the largest cryptocurrency for a short period of time. We're going to be talking about all of this as we go throughout the video, and I want to give a very candid, non-biased take. I'm not 100% certain in one direction or the other, but I'm definitely leaning more on the optimistic side. I'm going to dive into why as we go throughout this video. Now, before we dive into the content, guys, I want to give two quick updates that might be of relevance to you. First off, if you guys are looking to get out of the house and stuff and get out there and meet some people in the cryptocurrency space, then definitely consider registering for tickets at the Bitcoin 2020 Miami conference. I went to the one last year and I will be attending this one this year. So if you guys happen to be there and see me, say hello. And if you're interested in getting a discount on your tickets, use the code DataDash when booking and you get a 10% discount off. Not a bad deal. And on top of that as well, if you guys are interested in potentially winning up to $1,000 of Bitcoin, you can participate within the Digifox Get Paid in Crypto beta, where we're allowing anyone in the United States the ability, whether you're a contractor, W-2 employee, to be able to receive a portion or all of your salary in the form of cryptocurrencies. So if you're interested, check out the link down below on the Twitter on how you can participate in the description down below. So let's go ahead and dive into the core content, guys. Just wanted to get those out of the way here. Let's go ahead and take a look here at the ETH-BTC ratio. Now, as many of you know, for the past couple of weeks and months, since really back here in May, we've been talking about this idea of facing resistance around the midpoint range here between previous points of resistance and support and general kind of sideways contestment and consolidation in the past. And that has continued to prove as an ascending line of resistance here. Since then, we've been really turning the other shorter term previous range of resistance from the current bull market we've been in here since back in 2019, coming out of those consolidative lows, right? We've seen here this becoming a new range of support. Now, this has continued to play out. We've been in this consistent consolidation here, and I think people, rightfully so, are a little bit questionable about whether or not, are we going to see a breakout to the upside or a breakout to the downside? Sure, there are a lot of key signs here in price that signal bullish sentiment, which is generally speaking the higher lows and higher highs we can see here on the ratio over a longer term time frame, just like we've been seeing as well in Bitcoin, setting in those slightly higher lows and slightly higher highs, right? That is indicative that the bulls are still in the trend, in the lead of the trend here. But I want to go ahead and take a look at a variety of other metrics here to see whether or not we can get that effective super cycle for ETH, or more importantly, get the flippening, right? Something that could very well happen in this cycle. I know a lot of people think that that's far out, but Ethereum really, from this previous upper band range, only needs to make, I think, around an 80 to 100% move in order to do that. And I'm not saying it's going to remain there for a long period of time. That's not the name of the game here. We're investing in trading here in this case. We're trying to see if we can get that price point up there and make those returns against Bitcoin. All right, it's a pretty nice bet. If you can already invest in Bitcoin, that's wonderful. If you can invest in something that might potentially double against Bitcoin, that would be really, really great. So let's go ahead and dive a little bit further into this. Now, again, we have the confidence here in ETH-BTC ratio. We also have it here on the dollar pair, those higher lows, consistent general resistance, but still, if anything, higher points of resistance here, new all-time highs over time, right? We've been continuing to hold in the support line. It seems like the market order flow is picking up orders here. The limit orders and the order book are strong, holding that support. But let's go ahead and dive a little bit further outside of just price here. Let's take a look at some of the models there. As you all know, markets are driven by supply and demand. And one metric we've continued to watch here is the total value staked within the ETH 2.0 contract. This is the amount of ETH that has been set aside in order to generate more ETH yield, in this case, for the ETH to merge. Now, to put all the fancy lingo out, it's a major network upgrade for Ethereum. And when Ethereum is deposited in this contract until that merge goes live, it's locked within the contract, meaning that there is no withdrawing those Ethereum. And effectively, it's reducing it out of the effective supply in the market. And just back, I think last week actually, or technically, I guess just maybe a couple days ago, we passed over the $10 million ETH milestone. Just taking us back here since the beginning of the year here, if we go here towards January 1st, we've come from around 8.85 million ETH locked in the contract all the way up to 10,028,000. The number is continuously ticking up over time. It's not showcasing any major signs of declining momentum. And the great news about this is that this is going to, until that merge happens, and it's probably going to be a while away, right? A couple months, potentially a year down the line. It's important to note that that is going to change the supply and demand dynamics in favor of Ethereum. This is a bullish key sentiment gauge here for Ethereum, that people are not only locking up their Ethereum because they believe in the protocol and they want to get the additional ETH yield, but on top of that as well, it is just simply whether they are right or wrong that Ethereum is going to do well in the long term. It is going to change the supply dynamic. There's less ETH being able to be sold in the market. Now, another bullish chart here that I think is really something that doesn't get talked about a lot because people always focus on the ETH2 staking contract. What I'm really interested in here is focusing here on the percentage of supply in general smart contracts in the market. This is a measurement of how much of the Ethereum supply, rather than sitting in wallet addresses, is sitting in smart contracts. So these could be your favorite DeFi applications like Uniswap or MakerDAO, locking up their ETH in order to generate DAI stablecoins, locking up ETH as liquidity on an AMM or automated market maker like Uniswap, right? So generally, ETH is being used more in financial activities. So the more ETH is being used and kind of locked up in these protocols, it doesn't mean that it can't by any means cause any sell-side pressure, but it means more of the ETH is being utilized. More of it is being used out in the ecosystem and usually being locked as liquidity. Those are kind of the main key things, either it's collateral or liquidity. And because of that, we have a large amount of supply here that is effectively going into these smart contracts. And you can see there's a positive correlation here with the growth in the amount of ETH in these smart contracts, as well as ETH's price here, right? Kicking back here all the way towards March of 2020, right? We can start to see the trend correlation strong here. And on top of that, when the growth started to kind of slow here, right? Again, the momentum definitely has slowed down from the past. It's never gonna go as fast probably as it was back here, right? That's pretty much a given. But we can see here that price has not been expanding as rapidly as in the past, even though we are establishing those higher lows and higher highs. So we want to see this trend continue. I would say so far it's still a bullish sign here. We're not seeing ETH massively exodus from these smart contracts into exchanges. That's a really good sign for the supply side, a part of the equation between supply and demand. So again, another really bullish trend here, and I want to see that trend continue. But there is a third chart here, and there's two ways we can view it here, both in percentage terms and nominal terms, that I think is something we need to see continue further on. And that is taking a look at the balance on exchanges. Now, this metric, no matter what source you pull it from, is never going to be perfect. And the reason why is because none of the data science model aggregators that I found out there were using Glassnode in this case. There's a whole range of different providers who provide this metric, and they pull from various APIs and data sources. Put it simple, it's imperfect in the sense that we aren't able to see all of the exchanges out there in the market, right? There might be some other exchanges where some of this ETH is moved to. And predominantly, the area that I think this model usually misses on is the amount of ETH going into derivatives platforms, right? And again, during dramatic price declines or increases, right, that can start to change things as people get liquidated on the market, right? But I digress. The major point here that I think is very, very fascinating here, and one thing that we really need to see play out, is that we need this exchange balance to continue remaining neutral or declining, right? Now, I'm going to be honest here and actually say something that I think is probably not what you expected. You'd probably think, looking at this chart, we've got the blue line here, which is the percentage of Ethereum on exchanges, according to the metric, and along with that as well, price over time. Now, if you look at this, you might think to yourself, okay, well, we saw the decline here, price moving up. So if we think about it in that logic, right, and vice versa, if the ETH were to increase on exchanges, price should go down, right? That's a very fair observation. You might be thinking that, Nick, are you asking for the Ethereum on exchanges to continue declining? And all the while, that would be good. That would be great. And if we can get that, that's even more sign of more of a sign of confidence for Ethereum. I'm going to be realistic in saying that more than anything, we want this to at least just remain neutral and not increase over time. And why would that be a worrying sign? The reason why is because of what's known as distribution, right? And you can see here that as prices started to get towards elevated territory, that decline started to slow down here. And in fact, we started to turn back up here. And again, you can already see the price is starting to get hit here as we're watching the gray line here, the actual price of Ethereum. Those lower highs, right? Because the distribution, or the long-term holders, if you will, who are starting to realize weakness in the market, they're starting to offload more, and they're contributing further to the sell side pressure in the market. It's just simple supply and demand, right? It's like any other market out there. If people start to realize, I always think of crazes like the Beanie Babies back in the day, right? Back in the .com bubble, or the tech stocks, right? People start to realize that buyers' confidence isn't getting as strong, right? That can be a worrying sign. And I think that that's what a lot of people fear is going on right now. It's one of the fairest arguments, I'd say, to make the bearish case, because there really aren't many data science models. There aren't many reasons out there outside of excluding maybe the macro environment, if you will, that have me a bit concerned and justify that bearish intent. This, to me, is one of the last charts that I think we really need to see serious, maintenance of neutrality here on the trend around this 18.5% mark. Now, it doesn't mean that if this started to trend higher that ETH is ready to plunge tomorrow, but I think out of most models out there, it's one of the best ones you can be watching in the market to get a gauge whether or not things are going to start to continue increasing over time and continue to get better and set new all-time highs, or if we're going to go lower in price. So I thought I would point you guys focus towards this direction on these different data science models. Again, you can access this through a variety of sources and stuff. I'm under one of the paid packages for Glassnode, as I use it here a lot on the channel. But the fact of the matter is, we'll talk about it here on the channel from time to time here when we do these analyses on Ethereum. Another way you can view it as well is not just in percentage terms, but also in Ethereum terms. Now, it's normal here that you're going to be making higher lows over time, probably because there's new ETH entering the circulating supply. But in percentage terms, I really think this is the best way to view it. And you can see the similarities here in the sense of the kind of lower bound range and the resistance range here. So again, we want to see this hold out as long as we can down in this range before real intense distribution picks up, and they start to pick up that there's a momentum in retail buyers, the euphoria is getting too good, right? But that's a very key telltale sign that a top might be coming. But for now, trend's relatively neutral. It's not something I'm worried about. It's just something to keep an eye on, to remain cautious on. So anyways, I want to go ahead and dive through a few key things here. First off, again, when you guys are asking this question of whether or not you want to switch from maybe Bitcoin to Ethereum, I think that's a very fair thing you need to think about. Not just in the sense of thinking about whether or not you can make a great return in the sense of investing in Ethereum. But what I always encourage people to understand here is that when they're making, especially if you're in the United States or the vast majority of tax jurisdictions across the world where you have taxable events when you realize gains or losses, it's important to understand those different types of gains and loss events that you could incur by making trades in the market or rotating from one crypto to another, considering things like short-term and long-term capital gains. It's something I have to think about a lot as a U.S. investor. And one platform that can help you to calculate your taxes and keep on top of that is our sponsor for today's video, which is TaxBit. Now, for those of you who follow the channel for a long time, TaxBit's been a partner of ours here for the channel for a long period of time. And being big fans of the platform, you guys can get 10% off all plans from TaxBit using the affiliate link I have down below in the description. If you guys are curious about what TaxBit offers, I definitely recommend diving through their platform. What's really great is that you can plug in all your documents for free to see what your tax obligations are, and then sign up for one of the various plans and stuff you want to generate your forms and simplify your tax season this year. So highly recommend you guys check it out down below, and it's a great, great platform. Now, on top of that as well, the last thing I wanted to dive into that I think is a really important sign to watch here as to whether or not we could see, and I think this kind of gets to the time frame conversation on Ethereum springing up here in the near term and starting to outpace Bitcoin, is watching the altcoin season index. Now, if you look this up, you can find this online. It's an indicator on blockchaincenter.net. And you can see here that since back here in February, we've been really starting to consolidate right on top of entering into kind of the oversold territory like we did back here in August of 2021 and similar back here to May of 2020. Now, the important thing to understand here about this model is that it's taking the top 50 altcoins and it's measuring whether or not those top 50 altcoins are outpacing Bitcoin. And there's a score in this case. The more altcoins that are outpacing Bitcoin over the last 90 days, the score goes higher and vice versa, right? So we can see here on the model that we're a really nice discount range here. This isn't a period of time. And again, this is where a lot of people misinterpret it. When it gets into Bitcoin season, they think, oh, I gotta be in Bitcoin, right? And the ironic reality is that it's the opposite way. You should be looking to garner more exposure in this case when the market is risk off, right? Buy when there's fear in the streets. That's the key idea. And vice versa, when everyone's greedy, when it's altcoin season, the punch bowl's full, everyone's having a good time, and people are getting way too overly confident, over leveraged, that's when you take some chips off the table. That's when you leave the casino and you enjoy your profits. I like using the casino analogy and party analogy because markets at the end of the day, all the while, again, I think that they're fundamental and important. They have speculative tendencies, especially new markets like crypto. And as people say, sometimes it can feel like the wild, wild west sometimes. So anyways, just wanted to emphasize that here, that a lot of the models here are signaling and kind of supplying our reasoning here as to why we really do think we could see a wave here going forward. I'll say one thing humbly here, which is that again, with these lines, they're just kind of meant to be kind of a feel for what might happen, or kind of to display certain trends here, like the resistance and support band that we thought we'd chop through for a while. I will be honest that this trend, at least the higher lows and higher highs on like a shorter term time frame, really like starting to showcase the breakaway and getting above that green line, it is definitely taking a bit longer than what we previously thought here. Going through the kind of later half of 2021. So I think that we could see something here in the spring, but I want to keep it conservative. I don't want to say it's this week or in this month. We have to give patience to it. But again, if you're someone who's more passive, you're dollar cost averaging, it might be good to look at Ethereum versus Bitcoin. The supply and demand economics here look like they might be more favorable, both on a demand perspective, in the sense of more growth potential, and on top of that as well, a lot of waning supply factors that could put ETH in a deflationary state in the near-term future, which is really, really exciting stuff considering EIP 1559, which is burning Ethereum. That's something we didn't even get to talk about here in today's video, but all those things are really starting to help ETH shape up as an asset in the crypto market. And it's where I'm exposed pretty heavily in my portfolio as well. I put my money where my mouth is. I could be invested in Bitcoin, Ethereum, but I think Ethereum is going to be a continued winner here in this cycle. So I've told you all where I'm placing my bets. I've told you why I'm placing my bets on the table. I'm curious to hear what you guys think down below in the comments. If you like this video, consider dropping a like, consider subscribing, hitting that bell icon. And if you guys enjoyed the video or you want to add to the conversation, please leave a comment. Let me know your thoughts down below. It's one of the best ways you can support the channel is engaging down below. And until the next video, see you all in the next one. Take care, everyone.